Good morning. This is the video newsletter for buysellshort.com for Monday, September 7th. Hopefully everyone's having a very relaxing Labor Day weekend. Right now we're going to start off with the Dow 15-minute chart. We had a very nice pop on the market on Friday, up 96 on the Dow, which yet again frustrated the shorts. It looked like we were about ready to start our September tank, and now that sell-off has been put on hold, much to the chagrin of the shorts and bears. Right now, if you look at the 15-minute chart, we had that nice little pop. We've got the 15 minutes starting to curl up. We're probably looking at a golden cross. That's when the 50-day crosses through the 200-day on the 15-minute time frame, probably Wednesday or Thursday. And as you know, usually when we see that, we see on average 150 to 200 point pop on the Dow whenever that happens. Let's flip over to the daily chart, however. Here on the daily chart, you can see I mentioned a couple of days ago that we had that close below the 20-day exponential and that we were looking for the same sort of setup that we saw in mid-August where we had that close below it, the bounce the next day, and then the rally was off to the races. We had the same thing happen here again, and we've seen a couple of nice updays on the market. RSI bounced off the 50 level. ADX remains very, very strong, and then you can see we had this double bottom bounce on stochastics back to the 50 level. So if we follow the same trajectory we saw back in mid-August, we should be looking at a move back up to the 9600 level, and then that'll also coincide with a golden cross happening as well. So yes, we've entered the typically weak month of September. I believe the stat is on average the market gives up about 5% in the month of September over the last, 30, 40 years. So we'll be keeping an eye on that. Like all rules, rules are made to be broken. Just because September on average is a red month doesn't mean it can't have a green month every once in a while. So like I said in the chat room, we're dancing at the party. We're just dancing really, really close to the door. And whenever the music stops, we bail. So we continue to remain high cash. Any shorts that we have are considered insurance for our longs, and once we see that breakdown, we'd probably be looking at if we lost the 9100 level is when we'd be looking to really go high cash and start looking for shorts. But for now, things look good. European and Asian markets are up very nicely today. I believe on average, European and Asian markets are up about 1.5%, which is jamming the U.S. stock futures, and we should be looking, barring any bad news, for an up open tomorrow morning. A lot of positive economic news in Europe. Germany saying things are turning around. There's a big buyout offer in the UK for Cadbury. Asian market is up as well. So as of now, things look pretty good for an update on the market tomorrow. But let's jump into some stock plays. ASTM, we mentioned this one a couple of days ago, was back to our ad zone. Nice spike on this one on Friday on heavy volume, even though it was right before a holiday weekend. As you know, ASTM typically sees high volume moves before good news, and it looks like another news leak has happened on this stock. We're looking for a move to 48 cents plus. So 48 cents to 55 cents is our target here on news. Very close to getting a golden cross in this one as well. RSI is breaking up through 50. ADX remains strong, and we've got a buy signal in stochastic. So ASTM looks very, very good going into this week. AVII, this is the bird food play that we got a very huge and very nice move on a week ago. Possible hammer bottom on this one on Friday. So let's see if we get an up move on this one. Target is a move to 210. BCON. This is one that we have a very, very, very tiny, small, whatever you want to call a position in, just because of the potential news flow that could be coming. This spike here a week ago was on rumors of a large investment in their wind energy systems. It was a rumor actually that makes sense. On Friday, the company came out and said that they're going after another couple of government grants for another $46 million. So any sort of positive news on this one lights this candle. The only reason we're not in this one with a decent size is because there is dilution risk. The dilution risk goes away, of course, if they get an equity investment by a larger company. So that's the reason, if news like that comes, this goes on a huge run. So even though it's a tiny position, the upside potential on it is very, very large. So even a small position will pay off. And if news doesn't come and dilution instead hits, a small position reduces the downside risk here. Friday saw the oil stocks just go on a tear. We jumped into a couple of them, especially the Gulf sector, or the Gulf oil companies were just absolutely on fire. Let's pull a couple of them up here. You had EXXI up 100%. Let's see, the other one was AEZ. This one was up about 30% on Friday. Then there was IVAN. This was another oil, second tier oil stock. This one was up, 25%. And for that reason, we started jumping into some of these laggard small cap oil plays. DNE was a buy, 14 cents and under, hit 18 cents intraday and then pulled back, met resistance at its 200-day moving average, but also the downtrend line dating back to December of last year. If we see follow through on this one and a move and a close above 17 cents to 200-day moving average, this one is probably looking at the possibilities of 100% upside, especially with the momentum that we're seeing in these oil plays right now. RSI nicely up over through 50, very, very strong ADX and very strong on bounce volume. So even though, it's a penny stock trading pretty low, nice volume on this, nice liquidity, and at this stage, worth a little gamble play. Half plus gains were booked on that spike on Friday, and we'll be looking for continued upside movement this week. END, this is another oil play. These guys actually have a lot of revenue, a lot of cash, a lot of very valuable assets. Stock sold off over the last couple of weeks on news that they closed one of their North Sea oil wells. This is typical for oil plays. Not every oil drill that they do is going to work out. These guys have plenty of other wells. With the sector on fire, chart looks very, very nice here. After sell-offs, this one typically goes on a 40 to 50 cent move. So all we're looking for here, first target was $1.20, got to $1.08 or $1.18 on Friday, but really we're looking for a move to the 50-day moving average. That's at $1.31, and we should see that one tomorrow. RSI bouncing nicely. ADX, stochastics, all saying this is very nice upside. Stops right now, you could play stops at entry just because we've got a nice little gain on this one from the entries on Friday. EPEX was another oil play that we jumped into on Friday. This is a mirror of EXXI. As a side note, we were actually playing EXXI a few weeks ago in the 60 cent, 40 cent, 50 cent area, and just like this one is here, nice move on volume on Friday. We're looking for a move to 60 cents plus here, with stops now at 45 cents or break even. RSI popping, positive MACD cross, strong ADX, and stochastics triggering a buy signal. So with the continued movement in oil, at least tomorrow we should see nice follow through on these small cap oil plays. I mean, they're just on fire right now, and we're going to play the momentum while it's still there. OCLR has just been a very nice winner for us over the last couple of weeks. It continued to break out over the last couple of days and is very close to going on a very big move. This is a stock that has the potential to pull the same kind of move that we saw on UTSI the other day. Let's pull up the UTSI chart. UTSI 2 days ago, 50% move. So OCLR has the same kind of potential. Love the sector, brand name stock, and it's got a lot of cash. And this is the kind of stock that could get a hedge fund move. Last but not least, XOMA. We've played this one many times over the last few weeks, but we've got a symmetrical triangle breakout here. You'll see these black lines here on the notations. Difference between the high and the low is 37 cents. You add that to the breakout point, and that gives us a $1.24 target on the break of 90 cents. This is a play on FACT. Biogen put a buyout bid in them on Friday. Stock was up big. This stock has a lot of sellers in it, so it's a small play. Stops right now 78 cents, and we're looking for $1.24. They're at a bunch of conferences this week, so we could see some nice news flow from this play. So that's it for the video update this week. We're looking for big moves in ASTM, DNE, EPE, actually all the plays we put in there, and we're looking for an up open tomorrow. So that's it for the video. See you guys in the chat room tomorrow. Goodbye.